Hi everybody, welcome to Adulting 101. I'm Elaine and today we're talking more about student loan repayment. If you missed our first video explaining student repayment plans, be sure to check it out on our YouTube channel. Before we jump in, everyone's situation is different and you should definitely not consider us your personal financial advisor. But we hope this video gives you some basic information about managing your student loans and helps you figure out where to go for additional help. So let's get started. Today we're going to talk about two other ways you can manage your student loans: consolidation and refinancing. Depending on the types of loans you have and your interest rate, either consolidation or refinancing might be a good option to help you better manage your student loan debt and maybe even save some money. Now, consolidation and refinancing might sound the same, but they're not. And which one, if either, is right for you will depend on your situation. First, let's talk about loan consolidation. Direct loan consolidation refers to a process that allows you to combine all your federal loans into one single loan. This means instead of having a variety of federal loans, all with different interest rates, balances, and due dates, you'll only have to worry about one single loan and one monthly payment, which can help you manage your loans better. It can also be helpful if your loans are being issued by different loan servicers, which are companies that administer your loans for the government. This way, you only have to worry about one servicer rather than dealing with a bunch of different companies. Consolidation alone won't actually lower your total loan balance or your monthly payment. But after loan consolidation, you could explore other repayment plan options which could lower your monthly payment based on your income. And you could even qualify for loan forgiveness depending on your situation. So, should you consolidate your federal student loans? Consolidation can make a lot of sense if you have multiple loans and servicers and want to simplify your monthly bills. It can also be a great first step before entering an income-driven repayment plan. But there are a few things to look out for. First, you can't consolidate your federal loans with private loans. So if you have a lot of student debt that's in private loans, consolidation might not help you that much. Also, if you're already in an income-driven repayment plan, like a public service loan forgiveness, you definitely don't want to consolidate those loans. You will lose all eligibility for the payments you've already made under that program. Now, let's talk about what it means to refinance your student loans. You've probably seen ads on Instagram or gotten offers in the mail to cut your loans in half with one simple trick. These companies are generally talking about refinancing your student loans. It's really important to understand how refinancing works because it's not right for everybody, and many people could be better off looking at an income-driven repayment program rather than refinancing. However, if you're bringing in a good monthly income, have good credit, and usually have a great history of financial responsibility, you might be in a position to refinance your student loans and get a lower interest rate, which will save you a ton of money in the end. By refinancing, a lender pays off your existing loans, federal and private, and gives you a new loan with a new interest rate. Even if you don't have the strongest financial profile, you may be able to refinance with the help of a cosigner. This all sounds great, right? Well, there are a couple of things to keep in mind. If you refinance your loans, you will no longer be eligible for income-driven repayment plans or loan forgiveness. And for folks who are struggling to make monthly payments, income-driven repayment plans are likely to be better than refinancing. But again, if your income is currently high, meaning income-driven plans won't lower your monthly payment too much, and you have a strong enough credit score to negotiate a lower interest rate, then refinancing can make a lot of sense and ultimately save you money. Finally, it's important to know that the process of student loan consolidation or refinancing should always be free. So don't ever pay a fee for filing an application for consolidation or refinance. It's important to do your research and talk to trusted advisors before making a decision. You can learn more about loan consolidation at studentaid.ed.gov. And if you're interested in refinancing, talk to your loan servicer in addition to any private refinancing companies. If you want to learn more about all the ways people can manage their student loans, definitely subscribe to our channel and check out our videos, or follow us on Twitter, Facebook, and Instagram. Still have questions? Send us an email at digital@younginvincibles.org. Thanks, everyone.